How to invest during a recession. Investing is not a one-size-fits-all. At any given time, your investment strategy depends on your objectives, current financial situation, and preferences as an investor. I would always suggest that you consult a financial advisor to discuss the options that make the most sense for you. This video series is meant to be a starting point, not a comprehensive guide. With that all being said, let's talk about gold. Gold is best known as a hedge because for several reasons. It stores the value of your wealth, number one. The dollar you invest in gold will just be as powerful years into the future. Let's translate that concept into something more relatable, like rent. Let's say you had $10,000 in 2001. According to the US Department of Treasury and Urban Development, the median price of a one-bedroom apartment in Los Angeles at the time was $618. That $10,000, you've been able to pay rent for 16 months. Now let's assume instead, put that $10,000 into a savings account with a 1% interest rate. By 2022, you're gonna end up with $11,000. Today, the median price of a one-bedroom apartment in LA is around $1,600. $11,000 would only pay for 6.5 months of your one-bedroom apartment. Now let's assume you converted that $10,000 in gold in 2001. Gold was sitting at around $270 per ounce in 2001, so that $10,000 would have given you 37 ounces. Fast forward to 2022, gold is sitting around $1,800. That means you'd have a $66,600 value in the gold that you purchased back in 2001. You'd be able to pay for your one-bedroom apartment for 41 months. That's the function of gold. It freezes the value of your money. Number two reason to buy gold, it has an inverse relationship with the market. Every market crash, gold goes up. It also continues to go up for months after the economy starts getting better. And really, that's what you need in a hedge, an investment that won't move in the same direction as your other assets. Number three, it's the one true global currency. Regardless of where you end up in the world, gold is desired and needed. Even central banks want it. Imagine an entire country's wealth hedged against just one asset. It's just as valuable there, wherever they may be, as it is here. If you feel like the US is becoming too expensive for you, you can move somewhere else with your gold, and it will just be in demand just as much as it is here. And again, that's what a hedge is for. Fourth reason you want to hold and buy gold in your portfolio is an asset that's outside of the control of the government. Any asset that the government can affect will move with the economy. Look at the dollar. It's getting devalued because of government policy. So as the economy goes down, inflation goes up, recession approaches, and the dollar continues to lose its value. Even treasury interest rates go down as the economy worsens. Gold is outside of the control of any government. Nothing the government can do can tank gold. The need for it is so universal that no single government anywhere in the world can affect it. Fifth reason, it has no counterparty risk. Counterparty risk is the probability that the other party, the investment, the credit, or trading transaction, may not fulfill that part of the deal. There's a chance they may default on their contractual obligations. There's a lot of these investments out there. Since gold is neither controlled nor credited by any company or government, gold can't default, can't go bankrupt, it can't disappear. Purchase it now and you'll have it until you let it go or you sell it later. Sixth reason people like gold, its industrial use is just maturing. Gold is used in phones, computers, cars, any machine that has a computer system, dentistry, treatments for cancer and other chronic diseases, aerospace engineering. The list keeps going on, it keeps growing. Because of its unique quality, there's no other precious metals that can replace gold. What's even better is that the industrial uses are just starting to mature. As these industries continue to evolve, the demand for raw materials, especially gold, will increase. Let's take a cell phone for instance. The International Data Corporation predicts that the worldwide smartphone market will reach a total of 1.53 billion units in 2025, up from 1.35 units at the end of 2021. All these factors prove that gold is the best hedge, but some investors and experts insist that treasuries are better. They say that because of treasuries having zero default risk, meaning they are guaranteed by the full faith and credit of the US government, if anything goes wrong, the government can always print money to pay you, and that's basically what they've been doing. That's the one thing that gold has over treasuries. The interest rates of treasuries depend on the economy. During the pandemic, Interest rates went down just as investors needed more money. Gold isn't at the mercy of the government. It is a global currency. No one country can ever take it down or devalue it. I also advise that you check the interest rate of treasuries and compare them with inflation. Would you earn enough interest to cover the value you lose because of inflation? You got to look into it on your own. Noble Gold Investments has a free gold investment guide. It's the most comprehensive one on the market, and it's free. I mean, can't get any better than that. If you want to know more about gold investing, go to noblegoldinvestments.com and get all your information right there.